Alright, hello, welcome back to the podcast. Once again, everybody, PayPal and Patreon links both down below for anybody who wants to support me. Only do so if you actually can. So, shorter episode this time. Just taking a look at lead, as lead is behaving, or rather the market is behaving a bit out of place as to where it should be at least. In that lead prices are way too low given their current supply situation. For the last long while, a couple of years I believe, lead prices were staying around $2,000 a ton, and although they have elevated up to sticking around like $2,300 or $2,400 a ton now, that is still definitely a chunk below where they should have jumped up to by now, as lead supply is not in the greatest position. You can see here from the global lead production graph that global output from lead mines peaked back in 2013 or so, and it's dropped by between 15 and 20% since then. Granted, when it climbed up to its peak, it did overshoot demand by a bit, so there was sort of a cushion area for a while, as LME lead inventories had built up to, I believe it was between 400 and 450,000 tons in storage. So there was some bit from that initial excess to be drawn down on over these last few years. However, that has gotten down now to less than 10% of the initial stockpile, as lead inventories are now down to only about 38,000 tons in storage. So only between 8 and 9% of the initial excess stockpile remains. Meanwhile, global lead production from lead mines is not going back up. Now, the great majority of lead consumption worldwide is for lead acid batteries for vehicles. Not just cars, not just personal automobiles, but also, trucks and freight vehicles, construction vehicles and heavy equipment and everything. Though some percentage of lead does still get used in various chemicals and chemical processes. A little bit's used in soldering, some bits used in cables, and some percentage is used in ammunition. Granted, the actual percentage that does get used to make weapons ammunition is a lot less than people might initially think. The overall bulk volume of our lead consumption is for lead acid batteries, and we are, I assure you, still producing plenty of new vehicles. We are still adding plenty of new ones to the grand global total on the roads in the terms of additional tens of millions. In fact, at present, the global total of personal automobiles in the world is most likely somewhere between 1.2 and 1.3 billion, and our lead demand remains there. It remains quite active, hence our gradual depletion of the excess storage inventories over the last several years. And once supply becomes this narrow, usually it would be normal to see, not just for metals or energy products or anything, but even just any commodity, to see the prices start to jump. However, lead, or at least the lead market, is behaving a bit unusually, as it's kind of just stayed there around $2,300 or $2,400 a ton as of the moment. Whereas nickel, a metal that has similarly depleted its storage inventories down to close to 10% of what they were back in the early 2010s. Nickel, before the price chaos caused by Russia's invasion of Ukraine, had already gone up in price by over 50% over the last year or two because of its growing supply constraints. However, lead, as of the moment, is kind of just sitting there. So I'm not sure what's going on, but we're going to have to watch and see if and when it actually jumps up, just how dangerously low the inventories will have to get drawn down to actually cause it to do so, given they're already down to only 38,000 tons. But that's it for this one, so thank everybody for sticking around and listening. Like if you enjoy, subscribe if you haven't already. You can support me through PayPal or Patreon down below if you want to, only do so if you actually can. Subscribe to my cat too, she's out there. But that's it for me, so may God bless you all, and I will see you all around next time.